And Terracoin isn't the only stablecoin under pressure right now. Let's bring in Frank Chaparro. He's news director at The Block. Frank, what can you tell us is the latest today? USDC, Tether. I mean, how do these pegs look?
Yeah, it's a great question. We did see a bit of depegging in Tether, but I talked with the team, Kelly, and it seems like that they're managing redemptions quite well across different desks. I have heard that there is pressure to get out of stable coins right now because they are worried about the risk sort of illustrated in UST, which really can't be understated, right? This event is probably, and I tweeted this last night, the most destructive wealth event in the history of crypto, with probably about $50 billion just wiped out. So it's not surprising that investors are worried about Tether and other stable coins at the moment.
And from there, Bitcoin, I mean, look at shares of Coinbase today. They're down, at last check, about 27%. So the entire ecosystem is at what kind of risk to the stablecoin issue?
Yeah, well, with Coinbase, right, they have their own sort of specific issues. The street's really concerned about fee compression and the lack of volatility in the market. So they probably would be suffering or under some degree of pressure even without the UST debacle. But in terms of the broader stablecoin market, I talked to Tether and they said that they basically have a ton of US Treasury short term. So it would be pretty easy for them to honor several $1 billion worth of redemption. UST is not in a similar boat right now. I mean, they're kind of struggling to get different whales in the market to do a capital infusion, topping, at least according to our reporting, $1 billion. But at this point, with UST down as much as it is and Luna, the native token of Terra, it's looking a bit bleak. But that isn't to say that it could happen. It's just a question of when it might happen.
It was widely anticipated as well. I mean, last summer we spoke with Gary Gordon of Yale, who had done that research on runs in the primary money market financial system in '08. We talked to Caitlin Long, who hated the leverage that was building up in the system and said that, it was an unhealthy sign that was mimicking the bad behaviors from the traditional financial system in 2008. So be that as it may, it didn't change anything. If anything, these coins only became more popular. Where do we go from here?
Well, listen, what do they say? When the music is playing, you've got to dance. And that's exactly what has been happening over the past month with folks pouring into Anchor to get those juicy 20% yields. But once sort of it became apparent that basically there was a lot of risk here, people kind of ran for the exits, as Kate alluded to. Where we go from here, it's definitely a black eye on algorithmic stablecoins. It will be really tough for them to instill trust in the system, at least for Luna specifically and the broader Terra ecosystem. But right now, traders, I'm hearing from desks, are kind of de-risking and rotating into Bitcoin and ETH. There's a bit of a bid for Bitcoin and Ether right now. As you can see from the prices, Bitcoin's not down that much. And I think even though a lot of funds have been caught flat-footed, a lot of less crypto native funds aren't really that exposed to Luna. It's a large market cap coin, but kind of out there on the long tail relative to those two major blue chips, if you will. And I think that there will still be demand for Bitcoin and ETH, irrespective of what's going on with Luna.
And there's the price action. Bitcoin is off the lows today. It's back above 30,000 and hanging on amid all of these deep sell-offs. Frank, thanks for now. We'll let you go. We appreciate it.
Of course.
Frank Chaparro with The Block.